Hey guys, welcome back to another video. Is it just me or is it insane how quickly this year is passing by? I mean, I feel like only a month ago we were celebrating New Year's and now we're 5 months later, almost in May. It is crazy. As always, towards the end of the week, I release a video about the market conditions, what happened last week and what we can expect for next week. If you're new to my channel, welcome. I teach about the trucking industry with a heavy focus on the spot market as well as freight market analysis. So if this is a topic that interests you, feel free to subscribe down below. Now, before we get into this video, quick reminder, we are currently looking for flatbed drivers with 2 years of experience, preferably also flatbed experience. We are paying 70 cents per mile on all miles, and I'm going to attach the job description down below. If you have any questions or if you know anyone who's looking, please feel free to email me. Okay, let's get into our trucking market update and forecast. Ready? Let's go. As always, we're going to start with the general market situation. And as always, these charts will be attached down below because I know that they are sometimes hard to see. So we're going to start with outbound tender volumes versus outbound tender rejections. Volumes, the blue line, tell us how much freight there is in the market, whereas tender rejections tell us how much of the contract freight ends up on the spot market because it's getting rejected by those contract carriers. So the tender rejection rate is in the white line, and what we want to see is we want this tender rejection rate to be up because that means more volume is ending up on the spot market, right? So what can we see? Here we are, today is the 27th, this is as of the 26th actually. We can see that volumes actually went up. They have been going up since the 16th right here, and yeah, they went up. They are currently on their way down as of the 25th, it seems, but pretty high volume in relation to prior weeks, which is great. Tender rejections, the white line, you can see it's kind of bouncing, right? We were right here, then it dropped down to a horrible point on the 12th. And then since then it's been bouncing, but trending downwards. So yeah, we're currently on an upward trend, but the tender rejection rate, I don't know if you can see this, is at 2.83% right now. It's actually lower than last week. Last week it was at 2.85%. And yeah, unfortunately, only 2.83% of contract freight is ending up on the spot market, which is a very, very small volume. And paired with the overcapacity of trucks, unfortunately, there's just not enough volume on the spot market to get those rates up yet. Now, if we look at the tender rejection rate by equipment type, we can see the blue is the flatbed, the green is the van, and the orange is the reefer. The van actually had an increase in tender rejections on average from last week. It increased by 3.5%, which is great. Now, the flatbed fell by 5.5% from last week, and the reefer fell by 7.3% from last week. Now, something I noticed, and I mentioned this in last week's video, is that the flatbed rejection rate, it kind of goes up and down every week. 1 week it's up, the next week it's down. The dry van and the reefer, they are more stable, but still, it's kind of a bummer that the reefer and the flatbed went down when it comes to tender rejection rates, but at least the dry van is seeing improvement. Okay, now on to the National Truckload Index for line haul only. This is based on dry van data. This shows us the spot rates on average for dry vans without fuel surcharge. And as you can see, for the past few days, for the past week, over a week actually, it's been at $1.57. It hasn't moved. It flatlined. Yeah, the market flatlined. That's what happened. And of course, this rate per mile is very, very low compared to what it costs to actually operate a truck, right? For most carriers. In terms of the spot to contract rate, we're still at 90 cents, which means contract freight pays on average 90 cents more than the spot market. This hasn't changed from last week. What does this mean? This means that contract carriers, as I said before, they're not likely to reject contract freight for a better alternative. They might still reject it because of a lack of capacity or other things, but not because there's a better alternative on the spot market. And this means that if they're not rejecting that freight, less freight is ending up on the spot market. Therefore, the volume is lower. Therefore, the rates are lower. Now on to specifics, starting with flatbeds. I always show this. This is a truck stop chart. And we're going to look at where are the decent areas for flatbeds according to these numbers. We have number of loads picking up, what is the outbound volume like, versus number of loads dropping off, how many trucks are going into that market. And that way we can see the supply and demand basically. Now this is, as you can see, for all equipment types, but we're gonna focus on flatbed and flatbed. Here in the Western states, the only places that have more outbound volume than inbound trucks are Idaho, Oregon, and Washington. Now, does this mean that the rates are going to be insane there? Not necessarily, or not to every destination, right? Something I've noticed, and I keep repeating it, when you go to the West Coast, you get stuck there because the only good, relatively good rates are going to the West Coast. Now, in terms of the Midwestern states, Illinois, Kentucky, Minnesota, and West Virginia are those states where there's more volume than inbound trucks. Northeastern states, I was surprised. Maryland has become interesting compared to prior weeks, but in the Northeast, Connecticut, Delaware, Maryland, and Maine are the places to be. The plain states, nothing. Don't go to the plain states. There are always more inbound trucks there than outbound loads. So yeah, maybe not a great place to be. Southern states, as always, is one of the best places to be. This is where I have been trying to keep my flatbeds. Alabama, Arkansas, Louisiana, Mississippi, South Carolina, and Virginia. But let's look at the map. So this is a heat map for flatbed that is provided by Truck Stop. The darker a market area, that means there are more outbound loads than inbound trucks. So an interesting place to be. And what we can see, it was true last week, it was true the week before that, the southern states are the place to be. Although there are some random places in the West Coast. For example, it looks like Central California. We have I think this is the Oregon area, I'm not sure. We have some places in the Midwest, some places in the East Coast, but generally it's the South. Okay, now on to my favorite maps of all time. We're going to start by looking at van volume changes and what it all looks like. Dry van volume. The color on this map shows us whether volumes increased for dry vans or decreased. If it's blue, that means the volumes increased. If it's red, it decreased. The height of a market shows us the general volume in that area. So for dry vans, what we can see is that the volume seems to be increasing in Arizona, first of all, in the Pacific Northwest, which is interesting, even in Florida and the Northeast, but in the South and in the Midwest, it either didn't change or dropped, which is quite interesting. The market that is very interesting to me is this Arizona market. The volume in general is good there, and it has increased from last week. Now, if we look at tender rejections, this is the same map, just showing us tender rejections. Red means that tender rejections decreased, blue means that they increased. And what we can see is while the volume went up in Arizona and the Pacific Northwest, the tender rejections did not change at all. You see, it's white-gray. The tender rejections actually increased in Texas, Oklahoma, and then West Virginia, Ohio, and Michigan. Wisconsin has generally, it's a high tender rejection rate here, but it did decrease from last week. Midwest is kind of boring. Nebraska done, New Mexico done, but in general it looks worse than it did last week. So the question is, of course, where do you need to go if you have a dry van? And as always, this shows us the tender rejections versus volumes. The bluer a market area, the higher the tender rejection. The more elevated it is, the more volume. Like see in Atlanta, Georgia, there's a ton of volume here. Now I have labeled all the markets where the tender rejection for dry vans is over 10%. And we're left with 3 markets. Green Bay, Wisconsin, which is right here, Saginaw, Michigan, and Huntington, West Virginia. I totally butchered that, didn't I? Yeah, so these are the 3 market areas. But in general, we can see that the tender rejection rates are usually higher just by the color in the Midwest and in the southern states. The West Coast is still horrible, although look at that. In the Seattle, Washington market, it's getting a little bit better. But in general, for dry van, you will be very lucky if you go to these three market areas because they are relatively better. But keep in the Midwest and in the South. Finally, we have the head haul index for dry vans, which shows us outbound loads versus inbound trucks. If a market area is red, that means there are more trucks going into that market than there are loads going out. No negotiating power. Blue is the opposite. And what we can see is that with the exception of it looks like Spokane, Washington, and Southern California, the West Coast is oversaturated with trucks. Now, if we look at the East Coast and the Southeast, yeah, here it's a little bit better. There are more loads coming out than trucks dropping off. The Midwest is a hit or miss. The Dallas area is interesting. Pennsylvania is interesting. The Northeast done. But in general, unfortunately, there is still overcapacity. Now let's do the same thing we just did, but for reefers, starting with volumes. Again, the color shows us how volume changed. Red means it decreased from last week. Blue means it increased. Gray or white means that there was no real change. The height shows us general volume. And for the most part, we can see that the map is gray, which means there's not much happening, especially in the middle part. In the Midwest, it looks like volumes have dropped. It looks like California. I mean, Central California is still gross, but right here along the coast, it looks like it's coming alive a little bit, right? Maybe a start of a produce season, maybe. It's unfortunate that Arizona is still, first of all, it's flat. There's not much volume and no change. And usually there is a lot of produce that comes from Nogales, right? From Mexico to Nogales. But unfortunately, nothing there yet. Florida decreased. Maryland, Delaware, and New Jersey, there's an increase in volume. But in general, yeah, pretty boring map. Not much happening at the moment. Now, what about tender rejections for reefers? Well, I was really happy to see that the map is, it's great, but there's more blue than there is red, which is good. That means that tender rejections for reefers are increasing now in certain market areas. We can see that in the Pendleton market, the tender rejections increased. In the Midwest and in the southern states, tender rejections increased. Everywhere else, they stayed the same. New York and the East Coast, the Northeast is kind of flat, even though it did increase in Maryland and Delaware. But it's nice to see that there is a lot of blue here, which means that at least there is some semblance of hope. It's also nice to see that the tender rejections are increasing in Arizona, even though the volume didn't increase, the tender rejections are. So that's good. So where do you have to be if you have a reefer next week? As always, we're looking at tender rejections and volumes together. And I have labeled those places where tender rejections are over 10%. And what we see is we have the Pendleton market, 16.46% rejection. The volume is almost at 20, which is okay. We have the Omaha, Nebraska area, 10.45% rejection, normal volume. Sioux Falls, the rejection is higher, but the volume is lower. And Des Moines, Iowa, I'm gonna just do it with a French accent. Des Moines, 10% rejection and volume is at 16.28. But in general, if we look, it looks like the Midwest is still an interesting place to be. Looks like Dallas is coming alive. And of course, the Pendleton market. This has been consistent over the past few weeks. The Pendleton market is one of the best relative to others. So if you have a reefer, if our reefers were operating right now, I would be trying to go from the Midwest to Pendleton and back, or Pendleton to Texas, something like that. So what about the capacity or the head haul index for reefers? Again, reminder, if the market is red, that means that there are more inbound trucks going into that market than outbound loads. If it's blue, it's the opposite, more freight coming out than trucks coming in. We can see that the southern states, they have overcapacity when it comes to reefers. We can also see that the Midwestern states, they're very, very, very light blue. but there seem to be a little bit more loads coming out than trucks coming in. We can also see that Central California is still blue, which means that there are way more loads than there are trucks, maybe more negotiating power. Idaho, the Dallas area, and the Pennsylvania, New Jersey, Maryland, and Delaware areas. But of course, the reefer map looks like it's a little bit better than dry vans, right? There's not so much overcapacity as with dry vans. There's actually some blue in the map, which is awesome. Now let's take a look at trucks in the market. This made me laugh. Now, what this shows us, as a reminder, this does not tell us anything about capacity, but it tells us everything about driver behavior. If the market is red, that means that trucks left that area. If it is blue, it means that trucks entered that area. And what we can see, most of the map is red or white, which means that there was either a decrease in trucks in these market areas or they didn't change. But Arizona, for some reason, is the place where everyone decided to go. It might be because of produce. We know that for dry vans, volumes did increase in Arizona. For reefers, not so much. And also there's Kentucky, North Carolina, and South Carolina. These markets is where people really went. But it's hilarious. It's like everyone decided that this week they're going to Arizona. So interesting map right there. Let's take a look at diesel prices. And finally, I have some good news for you guys. Diesel prices have been scaring me a little bit over the past few weeks because they were either going up or whatnot. Now, which is awesome, I mean, they were bouncing, and finally they crashed and are still bouncing down. This is a better arrow than last week. Currently, we're at $4.22 per gallon on average, according to truck stops in the US. Now, something that really makes me happy is this chart right here. We have seen week over week that there are more and more green squares popping up, which means those market areas saw an increase in diesel prices. This week, there are less green market areas and more red squares popping up, which means that a lot of market areas are now seeing a decrease, except for New Mexico, Washington, Idaho, Utah, North Dakota, Arkansas, Wyoming, and South Dakota. Everywhere else, there was a decrease in diesel prices. And this is something that is really welcome because diesel prices going up in a market like today, I mean, that's Armageddon, right? So it's nice to see that diesel prices, at least this week, have gone down in a lot of market areas, with the exception of a few, and that they're still continuing to go down. We'll see what happens in the coming weeks, but for now, I'm going to count my blessings and say yay. As for me, well, this week was nothing really special. As some of you know, we are operating only flatbeds at the moment. We're not operating our reefers due to unforeseen circumstances. And as for our dry vans, we decided not to operate them at all given the current market conditions. But with the flatbeds, it has been a relatively normal week, nothing too exciting. I have managed to keep them in the southern states, which has really helped with that rate per mile. Again, flatbeds can be an awesome equipment type if you know where to go. But this pretty much applies to any equipment type. As long as you know where to go and where to stay, you can get a pretty decent rate per mile. Relatively. Now tomorrow I'm going to be booking a load to Cali for one of our flatbeds because it's time for my business partner or one of my business partners to finally take a vacation. But other than this one time, I try to avoid the West Coast altogether when it comes to flatbeds. So before I leave you guys, I know I said that I might be doing a live this Sunday. I decided to do it the following Sunday. So not this Sunday, but the following Sunday. And I decided to actually keep that schedule of every other Sunday for lives. It's just easier and it's not as redundant, if that makes sense. Now, next week, I will also be sharing our performance for our flatbeds so you guys can compare and contrast and maybe teach me something because, again, I am not a pro at booking flatbed freight, but I feel I've been doing pretty good. Anyway, guys, I appreciate you watching, wishing you an amazing rest of your week, and I'll see you guys in the next video.